Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the closing action on the D Street. Also with a wrap-up of what really happened through the trading session, the sectors, the stocks that are on the move, and also what are experts really recommending as strategy for investors with this very, very volatile market as well. We'll also get you the expert views, but first up, a quick check on how the Nifty and the Sensex are moving in the last half an hour of trade. So look at the Sensex. It's drifting towards the lowest point of the day. 370 points of a cut is what you can spot. We've given up the 59,000 mark as well as we speak. 0.6% of a downside on the Sensex. The Nifty is also now lower. Below that 17,300 mark, it's down by 100 odd points, so 0.5% cut for that one too. Look at the broader markets that are actually holding up right in the morning trade with quite a considerable amounts of gains. They're still holding up. I would say the mid cap 100 index is still up about 0.7% odd, and the small cap slightly lower though, but about 0.3% of an uptick can still be seen. So you can see that slide coming in and the mid cap still pulling up again and not really giving in to the pressure of the benchmarks right as yet. The India VIX has also shot up slightly, about 0.3% of an upside, 13.9 the current levels. In terms of the sectors, there's a mixed reaction, with the media stocks really taking the lead, with especially the stocks like Zee Entertainment moving in trade today on the back of some news flows. The auto stocks are up by 0.5%. Slight gains coming in on the PSU banks as well. That's the one that's defying the move. Otherwise, on the lower side, on the Nifty bank. The realty stocks are also up in trade, about 0.7% up. However, the market breadth is still skewed towards the declines. 34 stocks in the red on the Nifty 50 pack with 16 advances. Which are the stocks that are creating pressure? So you can see a whole lot of stocks from the pharma basket like Cipla, Dr. Reddy's down in trade. Also the metals pack, Hindalco is sliding away, with Vedanta also creating some pressure. So these stocks are under pressure. Reliance Industries is down by 1.8% at 23.24. So that stock is a heavyweight, which is capping the kind of move that we've been seeing for the markets in the upside. Coal India down by 1.7%. But on the gaining side, you do have the Adani Group stocks defying the overall gravity today. Adani Enterprises up by 14% right now. Adani Ports up by 5.5%. Some of the other stocks like Wilmar are also up in trade. Asian Paints, Power Grid, Britannia, some of the other gainers, and Ultratech Cement also up in trade as well. But time now to welcome our guest for the day. I'm joined by Mr. Nipun Mehta. He's a well-known market expert. Mr. Mehta, good afternoon, and thank you so much for taking the time out for Business Today TV. Overall, we've been seeing this very lackluster, dull market for a whole long time. I mean, 2 months, 2.5 months, and that's despite all the big triggers that we've already seen behind us. The budget's passed, we've seen the FOMC reactions, the RBI. How long do you see will it take for the markets to really break out of this range, and what will really help markets get out of this dull phase or a lackluster move?
So thanks, Sakshi, for having me on the show. Yes, of course, we've seen some major events being announced over the last couple of months. Markets have been range bound. Over the last few days, they've probably moved now to a lower range that we might see, and to a degree of weakness.
Yeah.
I think we've seen uncertain FI flows as well. Earlier in the month, there were inflows. We've seen outflows all over again. And I think all of this relates more to the inflationary fears of inflation, fears of higher interest rates by the Fed, by RBI. Fears of slowdown and recession probably have subsided to an extent, but I think fears of inflation and higher interest rates is something that's ensuring that FI flows are weaker towards India, towards emerging markets. Clearly, you're seeing currency, the US dollar, which is all of a sudden over the last month or two become strong again, clearly because of fund flows more towards the US dollar. It's all of that uncertainty which is ensuring that markets are relatively weak. Top that up with FI sales, and you have relative weakness that's showing up in the markets, the worseness showing up in the markets.
But what do you think will be the out of jail card for the bulls going forward?
So I think a lot depends on the figures, inflation figures that are likely to get announced in India, in the US, and indications by the Fed to an extent of what's the extent of rate hikes that you're likely to see. We had reached a situation where probably we might have seen only one interest rate hike or two small interest rate hikes in 2023 by the Fed, and all of a sudden you are at a situation where uh, you might have more rate hikes probably, or reversal of rate hikes happening as far away as the second half of 2024, which earlier was expected marginally earlier. So it's that uncertainty which is there, which is ensuring that flows towards the US dollar, flows towards US Treasury is that much more, and weaker towards emerging markets. So till you have that greater certainty on some of those macro issues, you are likely to see that uncertainty. Geopolitical issues on the one side, which of course continue to bother markets, but it's more the inflation fears that are actually creating the nervousness globally.
Sure. So, what is a better strategy that investors must adopt in this market? I mean, is it better to stay away, let the market settle down and find their place and a direction that they would want to take? Or can one continue to look at buying on dips? So we've been seeing consistent falls. I mean, we were looking at, I think, in November, we were thinking that the markets will actually touch record levels. 19K was up in the running, but all of that actually, the narrative completely changed after that. So we are now stuck in this range. So, what should be the strategy that you would advise investors to adopt now?
So, like I've said over the last couple of months, I think on the one side, there's no harm sitting on a bit of cash when seeing virtually a falling knife. The other is to temporarily park funds into fixed income. You're likely to go in this kind of an uncertainty. You're likely to, with interest rates being near high, that's a better option in all the uncertainty that's there as far as equity markets are concerned, both domestic as well as global. That you park some part of the money in fixed income, and on major dips below certain levels, it's always good to keep nibbling small amounts, relatively small amounts, and that's where the sitting on cash helps out. Uh, Rather than exiting a lot of the stocks at lower levels and maybe changing the portfolio. That's why sitting on cash to an extent helps in nibbling whenever the markets do show increased nervousness that might be there. So this kind of a dual strategy during 2023 will probably definitely turn out to be more profitable for investors.
Okay, understood that as well. But let's also focus on some of the news flows that are actually impacting some stocks. I'm talking about the Adani Group of stocks. Of course, this has been in the limelight and hitting headlines almost every day in the last 1 month. Today, there has been a sharp reversal of the trend that we've been seeing for a long time, especially with the sharp bounce that we've seen in Adani Enterprises stock that's up 14% today at the day's high. Of course, the other stocks are also, pulling up apart from the flagship major. So you have ports that's up in trade, power, Wilmar, all of them coming up in trade as well. Adani Green, some of them hitting upper circuits. In fact, 8 of the 10 stocks are up in the green today. How do you really look at this bounce today? And overall, how have you been looking at the developments at the Adani Group of stocks? Many investors must have been looking at the opportunity when we've been seeing consistent free fall. Like you pointed out, you said catching the falling knife is something that one should be aware of. Of course, there have been divided opinions on the Adani Group of stocks that I've been hearing from last 1 month. Your own take and your own sense of how should one view this bounce? Is it still going to be very risky for one to enter at this point in time in some of the stocks?
So it's very easy to presume that one day of turnaround or upper circuits in some of the stocks within the group after so many days of a downward circuit, it's very easy to presume that that's a turnaround and you're going to see upward circuits all over again. There's still uncertainty around a lot of the companies. There's uncertainty around how they're going to fund newer projects or newer acquisitions that might be there. Even existing projects will need to be funded given the extent of leverage that the group has. So there needs to be definitely more clarity coming around on that, on the extent of fundraising that the group might have over the next year or two, and what instruments they might use. I think the direct impact of the lower fundraising on growth on a lot of these companies also needs a fair amount of clarity. Is there like how likely to is it to impact growth in certain companies which were surviving largely on a fair amount of leverage that was there? But I think the impact on growth for the next year or two in the in light of lower fundraising could be significant, both on top line growth as well as visibility of future growth, to an extent, even on the profitability. So there obviously needs to be more clarity on that. Uh, Issues like, uh, I mean, these were more financial related. There could be governance related issues on which greater clarity will help. So I think
Yeah.
there's still a lot to be addressed before one can say with a fair amount of conviction that the turnaround in stocks, in stock prices, is going to be more sustainable.
Exactly. So I wanted to understand from you, what would you be really looking from the management side in case you think that, that's exactly what is needed for the conviction to really come in back, for the confidence, and for one to start looking at a fresh without having the fear that again something will go wrong, in a day's time. What is needed from the management side that will really calm the nerves of the investors who've been now holding on to some losses as well?
So, like I said, I think it's that clarity on growth that's for the entire group, and particularly companies which were surviving on a fair amount of global debt, uh, having benefited out of low interest rates globally over the last couple of years. I think how some of that, a lot of the debt has been repaid in over the last 10 or 2 or 3 weeks. Uh, how is that likely to impact growth? How is that likely to impact? There have been certain projects which the group had bid for, and they've needed to let go clearly because of absence of the flow of funding that is there. That's something that the group needs to clarify on. So I think it's more issues around funding and growth, and then of course on corporate governance that is there. I think maybe. Uh, Certification or statements by regulators on the price movement, which has which had been a concern in the past. That's something that could help, but that's more external related. But as far as management related issues are concerned, both financial and governance related issues need to be addressed a little more vocally and openly by the management in the near term, in order to have that flows back, or the confidence back into this group and into the stock into the shareholding.
Right. So, any particular stocks from this basket that you would likely look at, as an opportunity at these levels, apart from the others?
So, for compliance reasons, will not
Sure.
necessarily pick any stock, any
Okay.
specific stock in the company. But I think there are two or three which are very obvious, which are backed by fairly large assets, where there are clearer flows in terms of revenues, in terms of profitability.
Sure.
Growth has been a lot more visible, and I think clearly there are three companies which are largely backed by significant assets, significantly more than the extent of debt that they have,
Sure.
or where the ratios are that much better, both profitability as well as the debt equity ratios are far superior, which could be looked at closely.
Right. One more stock that I want to talk apart from the Adani Group stocks, but perhaps one is forced to link the two as well. I'm talking about LIC. The stock has really been battered in the last 1 month, even though the holding is just like about 1% or so, the exposure that LIC has to the Adani Group investments. But the stock has slipped about 15%. It hit a record low yesterday. It's coming back to those levels again. It's 579 yesterday. We saw 567 being hit. The market cap erosion that we've seen for this one starting from the IPO prices. How do you look at LIC at this point in time? There are some, buzzing thoughts and, some articles that have been reading about, some opinions coming about that, it's perhaps better for the government to look at a delisting of LIC. How do you look at all of this news flow?
So I think these are issues that come about largely when particular stock prices fall significantly. Uh, it's important to understand that all this is investing in equities. When the stock prices of any of these, forget the Adani Group stocks, but any of the other stock prices which were going up, nobody was complaining. Then why complain when the stock prices are going down? I mean, there was a time when a stock like ITC had gone into double figures, and LIC still had a significantly large quantum of ITC as well. Nobody was talking about. So I think investors need to understand that this is equity as an asset class. You will see ups and downs. Uh, maybe to a small extent there was to a very limited extent I would think there was some concentration. 1% is not really. I mean, you can't even term it as concentration of holdings. But I think one needs to understand and appreciate that there's a mix of investments that are there as far as entity organization like LIC is concerned. There's a fair amount of debt. There's equity that is there, and within equities there have been ups and downs, and this kind of an upheaval could might as well result in maybe an extent of cleaning up of the portfolio
Yeah.
or whatever extent. But I think this is something which investors probably need to take in their stride, and maybe this is something which is showing up as an opportunity to get into companies like these, stocks like these.
Okay, understood that as well. But Mr. Mehta, for you, where are you finding interesting pockets which still have are showing good opportunities to invest in, even in amid this volatility? I know you said that it's better to stay on cash also in some phases of the markets. But where exactly would you be looking to put money once things turn more positive and there is a clear direction in the markets too?
So I think capital goods probably top the list. Beside, of course, the banking stocks. Uh, Both of them clearly stand out in terms of visibility of growth over the next several years or in next at least 3 to 4 years, and of course their profitability. We've seen incrementally businesses over the last 2 or 3 years cleaning up balance sheets, reducing debt. Uh, that's something that's clearly likely to benefit sectors like banking, like capital goods, and I think that's where and in some of these sectors, you clearly there's clearly under ownership that was there, which now is gradually getting corrected. So I think both of these sectors, beside of course IT, is something which investors should concentrate on whenever there are serious dips that are coming on in the market. There are of course very small pockets within pharma, within infrastructure, few select stocks which also need to be or can be looked at. But predominantly, it's these three or four sectors which should be looked at very opportunistically on dips.
All right, understood that as well. Well, thank you so much, Mr. Mehta, for being with us and sharing these insights on the markets with all our viewers. Always a pleasure speaking with you, and we shall continue to discuss more about the markets going forward as well. Let's quickly take a look at how the markets are trading at this point. Slightly off the lowest mark of the day, but still about 290 points lower for the Sensex, 58,997 as the current level. The Nifty is just about 80 points lower, 17,312. About half odd percent of a cut is still being seen. So perhaps looking at about 10 minutes away from the close, we could be closing in the lower trade again, second day in a row today, and continuing with the losses from the last week as well. We'll keep you posted with every development that you should be able to track on the markets, but for that you should subscribe to this channel, Business Today's platform, and also continue to engage with us by our other social media platforms to catch all the buzzing action from the world of T Street. Many thanks for tuning in for now.